Hello everyone. Today we are going to review the new release of the SRS indicator. First of all, let's make a review of the main features of the SRS. The SRS is a pullback setup where we use a few basic indicators to define the trend and then the entry. On this example, I will turn off the new filter, and now we have an example of a downtrend. This section in the middle is sideways, and then an uptrend. To define the trend, we use a slow moving average, the blue line, a channel or an envelope with a faster period, and when the blue line is inside of the envelope, the trend is neutral or sideways. We can see that this happens in this interval of time. There are a few bars where we have an uptrend, but finally the uptrend is defined on this bar. This is the crossover of the blue line and the channel that defines the uptrend, and this is the crossover that defines the start of the neutral state or sideways condition. So we define the trend in relation of the blue line against the envelope. When the blue line is inside of the envelope, we are on sideways. When the envelope is below the trend line, we are in downtrend, and when it is above the blue line, the trend is to the upside. Now that we have defined the trend, let's see how to define the entries. On this example, from this point, we are looking for a short entry. For that, we need the price making a pullback big enough to touch this gray line, which is a Donchian channel. When the price touches that line, we have a signal. If we make that Donchian tighter, so with less bars, instead of 16 bars, let's say we reduce this to 4 bars only, then we have much more signals because the Donchian channel is tighter to the price action. We have more signals, and each signal is a diamond that indicates where we must place an entry order. For a short, it is a sell stop over the diamond. If at the next bar we don't get a fill, like on this example, on the next bar we locate the entry order over the new diamond. On this example, we don't get a fill, and we move the entry order higher until we get a fill. This is indicated by the arrow. The arrow indicates when the price touches the diamond price, so our entry order gets a fill. As we can see, when we make the channel tighter, we get a lot of signals. A lot of them may be bad signals, like these ones. And as we saw on previous videos, Our only option to fine-tune the sensibility of the setup is using the Donchan, making the Donchan channel big enough to get a signal only on good pullbacks. Now with 12 bars the Donchan never touches the bars, so we only get the second entry. We have a back signal and then a good short. These blue lines, these blue diamonds are not entries because the price never touches them. And finally we get a long entry, and we adjust the order until over the last diamond until we get a fill shown by the arrow. If we want to automate this setup with markers, we need to configure markers to trade arrows, because the arrow is painted at the exact moment the price touches the entry price. Now on this new version we have a new filter and also a new indication that uses a stochastic as we used on previous videos with the combination of reversal and SRS. Now we can do this all together with only one indicator. If we add a stochastic, this is a fast stochastic with a period of 7 and a smoothing of 2, so this is very fast. And now we are interested in entries only on overbought or oversold areas. So we have the option now on the SRS to define a stochastic with thresholds for oversold and overbought, the period and the smoothing, and we can paint on real time the background, so we can know if the signal is on an overbought or an oversold condition. On this example the stochastic is oversold, so this is a good option to enter long. We can also filter the signals, because by now we are only having a visual confirmation of the stochastic. Let's say that we make the Donchan smaller enough so we get a lot of signals. Let's say we make it 2, the worst case, so the Donchan is almost tied to the price, so we get a lot of diamonds. Instead of taking all the signals, all the arrows, we can take only those that overlap with the corresponding overbought or oversold. The only pullback where we have an oversold, so a good option to enter long, will be the last one. If we want to filter the signals, so we avoid these arrows, now on the indicator we can set to filter the signals. So all the arrows where there is not an overbought or oversold disappear. So we only get signals, long signals when there is an oversold, or short signals when there is an overbought. This is an example for a short. We get a fill at the price of the diamond, and we avoid the previous signals that we had on the previous example without using the stochastic. Same for these other signals where the stochastic is neither overbought or oversold. Only when the pullback is big enough to have an overbought condition and the stochastic starts to return, now we get a back color according to the short signal. Here we have a short signal at the extreme of the bar. This is a bad trade, and finally a good trade. On Market Replay we can see an example on how the background changes real time depending on the stochastic condition. So we can take manual decisions if taking or not the short signal, and of course if we want to automate we can just let markers to trade all the arrows filtered by the stochastic. This indicator is also available for NinjaTrader 8, where we have the same input parameter. And as we can see, it works on any bar type. On this example it is a Unirenko, and we can see that we get very good entries on long pullbacks. And for the short, all this area is on sideways because the blue line is inside of the envelope. And here we started the short trend, started to looking for a short, and this is the pullback entry. This is where our entry order was pending. Now we have another possible short entry but never got a fill, and the blue line enters the envelope, so we are again on neutral state. Hope this video has been interesting, and if you have any question please post below this video. Thank you everyone, bye bye.